All right, guys, today we're going to look at financial planning and implementing your financial plans. Basically, it's a crucial part of businesses. You've got to figure out where the money's coming from, how much is going to be coming in, how much you're going to need to spend, and basically, is there any gap between that? If it's in the positive, you're going to be making profits. In the negative, you've got to find some other way of financing or stop trading. All right, so basically, if you look at this diagram beginning at the top, you're addressing your financial position in the first instance, and from there determining your financial needs. The next step is then to start to develop budgets. All right. From there, you're maintaining your record system, so an accounting system such as Xero or MYOB, looking at financial risk, what's going to happen in the wider economy. Is the exchange rate going to fluctuate if you're importing or exporting? Basically, the government going to start implementing new taxes, whatever it is, and then establishing controls to make sure that you're managing that. So the financial needs of business obviously decided by the size of the business. Larger businesses and the type of business have very differing financial needs. The current phase of the business cycle. If you're in the growth, you're going to need a lot more capital coming in. If you're established, the business is running itself, making lots of profits. And any future plans for growth and development. All right. So if you want to open a new shop, you're going to need finance for that, and your ability and capacity to source finance. Remember when we did the preliminary course, I'm talking about sole traders. Much more difficult to get external finance if you're a sole trader than if you're actually an established company. So once you become a company, the financial markets are much more open to you. And your management skills for assessing your financial needs and planning. It's one of the most difficult things to do in small businesses is to be able to do this financial planning. That's why a lot of them actually use external advisors to do that. Type of things that you need to collect before you can make your plans, your balance sheets. The balance sheet is basically a tabular form of the accounting equations. Remember, assets equals liabilities plus owner's equity. The balance sheet tabulates all the things that the company owns, all the things it owes, and the difference is what the owner has tipped into it. Income statements is the amount of money coming into the business. Cash flow is the amount of actual cash coming in. So income can be things that are set on invoices that you haven't been paid yet. They're still classified as income. Cash flow is the dollars and cents coming in and leaving the business. Basically, your sales forecast, what are you expecting to sell? Depending on the type of business you're in, sales can take months or even years to come off. So you need this large pipeline of forecasts of knowing where you are in the sales cycle to know when you're actually about to start hitting sales. Your budgets that you've already got. Any bank statements that are showing how much cash at bank. And any weekly reports from departments within the company. Remember we talked about a break-even analysis, the point at how many sales you need to make to actually start paying for itself, and your reports from any financial ratio analysis and interpretation. With this sort of information, you can then start preparing budgets, which is what we're going to start looking at next lesson.